Hello friends, today's topic Nifty crashes by 309 points today. Any reason for panic? I am Dr. Bharath Chandra. Purpose of the video is financial education of society. Indian markets are at a 4 months low. Nifty fell by 1.3% today, closed below 24,000 mark at 23,994 points. At one point, it was down 1.8% today. Nifty has fallen by 8.5% from its lifetime high. If it falls another 1.5%, then it can be called a correction. If it falls by a total of 20% from recent high, then it will be called a bear phase. This is the testing time for new investors since it is not easy to see a portfolio value fall significantly. If you are a long-term investor, don't panic. Major reasons for the fall in markets. One, uncertainty over US election results. Global markets are focused on the US presidential elections and analysts believe that there could be some short-term volatility in response to the election outcome. Today's fall could be because traders don't want to be holding positions before the elections due to the unexpected volatility. 2. China's stimulus may be announced. China's National People's Congress Committee will meet between November 4 to November 8 to discuss and decide about the stimulus measures that were announced earlier. The Chinese authorities are expected to announce one of the largest fiscal packages since COVID to boost sentiment. So FIIs may be selling in Indian markets to invest in China. 3. Federal Reserve meeting on 6th and 7th November. The US Federal Reserve's monetary policy meeting will be held between November 6 and 7. Investors are cautious ahead of meeting. Rate cut is expected, but we need to see whether it will be 0.25% or 0.5%. 4. Weak quarterly results. Most of the companies which have announced their quarterly results so far have reported quite weak results and below analyst expectations. Demand for various products was high in both urban and rural areas in July-September quarter. So this is a reason for investors to sell stocks considering the expectation of further slowness in business. 5. Oil price rise. Oil prices continue to rise today also. It rallied by more than $1 on a decision by oil producing companies to delay plans to increase output. If there is limited supply of oil, then the price will rise due to that. Rising oil prices are not good for most countries, including India. 6. No stoppage of FII selling. After FII sold stocks worth around 1.1 lakh crores in October, look like they have continued the selling today. FIIs may continue to sell in this difficult phase of the markets. 7. India VIX at 3 months high. India VIX or volatility index went up almost 5% today to 16.7. It's a 3 months high. Whenever there is a spike in VIX figures, there is a chance of further weakness in the coming few days and weeks. As we have been cautioning the last 2 months or so in our videos, this correction was expected and not a surprise. As of now, it is still not a very significant fall from the lifetime high. It is just feeling significant since the fall has been quite continuous and investors are not very used to the market weakness. There is possibility of some more weakness. However, it is almost impossible to exactly guess the bottom of the market. If you are a long-term investor, continue doing SIP SIP. Also, don't miss the opportunity to invest lump sum in phases for the next few months. Don't just invest a lump sum at one shot. It's a good opportunity for investors who have a vision of at least 8 years. Don't be surprised if next year is either a dull year or a weak year for markets. Mentally be prepared to face it if analyst prediction does come true. If you don't have much money to invest now, there is nothing to worry. Just watch and learn from markets on how it moves during a downtrend. Don't panic. End of the video, here is a question. Are you fearful of further market weakness? Yes or no? You may type. In case you are not the member of this channel, this is the time to subscribe. Press the bell icon. Send the video to all your friends. The video is good. Press the like button. Thank you for watching. Bye bye in all the best.